Welcome back, Freedom Savers. So I have quite an update for you this time. A lot has gone on. Of course, as you know, I'm in the process of moving out of the house and moving in with a roommate and reducing my expenses dramatically and hopefully being able to save 65 to 75% of my income doing the FIRE plan to get a decent retirement, or at least a livable one. Considering I'm already 49 and I'd like to be able to quit working at 55. Whether I actually quit at 55 or not is going to be reevaluated as I come closer, but for now the plan is definitely to retire at 55. At that point, I want to have at least $250,000 in savings between the 401k and the IRA and taxable accounts. So I'm going to retire on $250,000, but I also have a pension and I can get Social Security at 62. So that's the plan. So what happened this week, or this month I should say, since I'm doing these monthly? Well, I had more silver than I expected from my mom when she died. When she died, she did leave me some silver, and I just bought a safe and stuffed it all in the safe, shoved it in the closet, and called it good and forgot about it, just knowing that I had a little bit there just as an emergency. The price of silver did go up quite a bit, and unfortunately I didn't sell it, and then it went back down. So the price I sold at, now that I've sold it, because I sold all of the silver, is just barely higher than when my mom died. So my cost basis is the date that she died, because that's when I inherited it, and so taxes on it should be pretty low. Overall, I got a very nice jump start of about $67,000 to $70,000 in silver that I sold. So that was a nice bonus, and definitely jump started my plan here, my FIRE plan. So I am completely out of debt, including the 401k loan. So my daughter's student loan is completely paid off on my part, not hers. And my $23,000 that I owed myself to my 401k is paid off. So I'm completely 100% debt-free once again, thank God. All right, I'm going to go into a few things here. This video is going to be portfolio updates, portfolio performance versus the market, and my net worth. This is an all-in-one, all-inclusive video. So let's get into it. First things I want to talk about are my investments. My investment strategy, as you know, is going to be dividend growth investing in the Roth and index funds, just total stock market index funds outside of the Roth. So that includes my 401k and my taxable accounts. Outside the 401k in taxable accounts, I will be using, well, I have the taxable account with M1 with only $100 in it, but I'm putting the money into Fidelity's zero expense ratio. FZROX is the ticker symbol, entire stock market index fund. And so far it's working out pretty decently. My investments are going to be 100% stocks, and the reason for that is because my pension and Social Security are essentially my bond part of my portfolio. My pension value is actually, if I was to value my pension out to where it would produce that much income, it would be worth over $400,000 or $450,000, somewhere in that range. And then you add Social Security on top of that, and you're talking a nice chunk of money that would be saved up in investments in order to produce that much income. Therefore, if you really look at it, 80 to 90% of all my investments are technically in bonds, if you consider the pension and Social Security bonds, which I am. So that gives me no other reason but to invest 100% into stocks in all of my personal investments. So I hope that makes sense. I did buy, so I sold all the silver, and I invested approximately $41,789 into the stock market probably in the last week. Now, as you know, in the last week or so, we have had all-time highs in the stock market. So I am technically buying at the all-time high valuations of the stock market. But oh well. $41,000 injected into the stock market at the highest valuation possible. And apparently that seems to be my trend, because if you remember right, when I started the Roth, I started it when they were all-time highs. That's fine. I'd rather be in the game than have cash sitting on the side doing nothing. I do happen to still have about $30,000 sitting in cash in my 401k. So if we do have a downturn, I can still take advantage of it a little bit with that. I put my notice in to move out of this house. As you know, I rent a 3-bedroom, 2-bath, 2-car garage house and have for 16 years. I put my notice in and I will be moving out by the end of May. I still got a lot of work to do on the house, a lot of stuff to fix and clean up and stuff like that, so I don't get charged too much. I'm also going to be probably paying people to clean the backyard and the house itself, just because my time is more valuable than the money it's going to cost at this point. Overall, I think in order to move out of this house, it's going to cost me somewhere between $1,000 and $2,000. That may sound excessive, but I have lived here 16 years and had kids, break stuff throughout the years, and dogs, and et cetera, et cetera. So there's a little bit to take care of. Anyways, the point is I am getting the hell out of here and moving into a place that I can live much, much cheaper with a roommate. So let's get into all the updates on this video, shall we? Before it gets too long with me just bullshitting and you staring at my channel for no reason. We'll start with the smallest accounts, or the, not smallest accounts, because we're going to start with 401k, but we'll start with the less interesting stuff and go to the more interesting stuff. So let's start with my 401k. So my 401k, I did pay off the loan, or I put in the payment to pay off the loan, but it hasn't all processed. And I put in enough to pay it all off except for one payment, which will come out of the next paycheck, of about $337.96. So, assuming the loan is paid off, which it hasn't actually processed yet. It should have actually finished processing today, but Vanguard doesn't update until like midnight, so that's kind of upsetting. But as long as everything went through the way it should have, my value of my 401k is $108,949. I have a loan out for one more payment of $337.96, giving me an overall value of $108,611. And if you look at my screenshot here of Vanguard, you can see the entire value, and it shows a loan of $23,000 there, or $22,000, whatever. And that's because that payment hasn't completely processed yet. All right, jumping over to our taxable account with M1 Finance, I had $100 in here basically. I got a $10 referral from a buddy who set up his account, which means I've deposited a total of $110. We're at $114.50 with 35 cents in cash. And so that brings us to $4.50 in gains, or 4.09% performance. And I'm not depositing anything into here right now, and it only holds VTI right now. That's all that's in here. So taxable $114.50, 35 cents. Only holding VTI. Dividends. I got one dividend from the VTI, one from General Electric, which is a 35 cents sitting in the account currently. Yearly, it's not producing much, $2.35 a year, 20 cents a month, blah, 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 blah. So that's the VTI taxable account, just holding VTI, that's it. $100 sitting in there just to maintain the account for no reason. Let's go over to the Roth. The Roth is a little more exciting. I did max out the Roth for the year. Since I had the cash, I just did a lump sum investment and just dumped it instead of dollar cost averaging every day for the entire year. So as you can see here, I did a deposit of $4,165, which maxed out the Roth. Current value of the Roth is $11,999.58, and I got $1.32 sitting in cash from dividends. If we come over to the Roth, $11,999.58, $1.32. Same dividend growth portfolio I've always had. All that good stuff. On the Roth, dividend-wise, we've earned $100.66 in dividends. This month, we've been paid $14.64. This year we've been paid $59.21. Now, the fun part is the yearly dividends. This is all updated as of a few days ago when I updated. Nothing's changed because I'm not buying any different ones here. The Roth is producing $380 a year, giving me $31.50 a month basically. So that's not too bad. With $31.68 a month, that means it will automatically reinvest 3 times a month on average, depending on when I get paid those dividends, of course. But 2 to 3 times a month, it will automatically reinvest for the rest of the year. Should make tracking dividends simple enough, where it doesn't get too overwhelming over here, where the dividends all just build up, right? So that is the Roth. Not much else to say on that. It's maxed out for the year, and I can't put any more in it until 2020. And 2020, I'll be able to put 7,000 in it instead of 6,000, which will be nice because I break 50, yeah, blah, blah. I break 50 years old. All right, now to the taxable account, Fidelity. Since I had the extra cash after maxing out my Roth and paying off my 401k loan and paying off my daughter's student debt, after paying all the debts and all that good stuff and maxing out the Roth, I still had about $15,000 in extra cash. Technically, I had about $25,000 in extra cash. I'm leaving $10,000 as an emergency fund in cash in my bank account. My bank account pays me 3.01% interest on the balance of my checking account up to $10,000. So that's pretty awesome. Again, I love my credit union. All I got to do is use my debit card 15 times a month, which I just buy 25-cent sodas at work out of the soda machine because we get them discounted. And I've easily used my debit card 15 times. So I will earn about $25 a month just for having that 10 grand sitting in the bank. Plus it's an emergency fund that's right there waiting for me, liquid. And then I've got a little bit of extra cash in the bank as well to for the move and expenses and whatnot, and that's about it. Right now, I think my balance is around 16 grand. Anyways, I deposited $14,900 to bring this entire deposit to $15,000, and I put it all in FZROX. And as you can see from my screenshot over here, this is my Fidelity account, and you can see my position in FZROX and my current gain and whatnot. Now on the spreadsheet here, as you can see, it only shows a gain of 0.53% overall, and since I switched to FZROX, 0.52%. But it was at 7 point something percent, almost 8%, and it was perfectly in line with its index. But since I deposited such a nice large sum all at once, of course, the few bucks that I have had a gain on only comes to a small percentage of that and shows my overall gain is much smaller than my actual performance has been with just $100 in there. So that's why the gain looks so small here when it was actually up to 7, almost 8% previously. Yearly dividends, I have no idea on this one because I haven't been paid any dividends on FZROX yet. It's only paid 2 in all of its history so far, since it's a brand new fund from end of 2018 there. So there's that. Let's look at, before we do anything else, because I don't have it open here, the portfolio versus market. And it's going to load up, recalculate, but these numbers are all good here. Essentially, the Roth is still outperforming the market, so my dividend growth investing is still outperforming the indexes, and still outperforming the market overall by 2.04%. It's beating the market average, which I'm very happy with. The taxable account, which only has VTI in it and only has $100 worth of VTI in it, is underperforming the market by 1.24% on average. And zero expense ratio, FZROX, supposedly is underperforming the market by 8.48%. This is incorrect. This is because, again, the market average since I started that one is 9.01%, and I was performing up to par before that. Maybe I guess it wasn't 7%, it was 5 point some percent. Either way, It would be underperforming the market, but not by 8%. Overall, if you count that in there, then I'm actually underperforming the market by 2.5%, but you really can't count this one. So if you take the VTI and this one, technically I'm still outperforming the market by, say, 1%, somewhere in that range. But overall, that's the numbers, that's how it looks. If we look at the particular funds, right, so FZROX, its index is FD, US, TMP, blah, 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 right? That's the actual index. Well, I compared the actual value and actual growth of that index to the actual performance of FZROX since the date that I started investing in it. And FZROX has actually outperformed its index by 0.13% or 13 basis points, which is pretty awesome. So far it's doing pretty well for me. VTI, on the other hand, if you check it out, this is its actual index, and VTI's performance is 5.19%, its index is, but versus its index, it's actually down 1.10%, or 110 basis points. So VTI is not performing as well to its index as FZROX is with Fidelity. So far I'm very happy with my choice to put my money in FZROX. Completely free to own, free everything, zero expense ratio, blah, blah, blah. I love it. So far, so good with that. Yeah, this is the date from since 2.4, all right? But at 2.4, I owned the two other indexes, the large cap and the small cap or something like that. And I did not own FZROX. So only looking at FZROX, its performance since I've owned on 325 is 5.37%. So if you look at 5.37%, compare it to its index since I actually owned it, because this is from the date 325, its index performed at 5.24%. So it's actually outperforming it by 0.13%, as I showed before. My track gains is 0.52% on it because, as I said, I injected 15 grand in cash into it, so my gains don't actually show the proper performance for that. VTI, my taxable, since I did it on 322, 4.06% is its total gains with dividends included. My performance shows 4.09%, so it actually has outperformed. My portfolio is outperformed by 3 basis points. I think that difference is just most likely from one day's trading when I may have counted the value on the start date of 322, but I didn't actually buy until after the market closed or something, and therefore it counts as something else. Who knows how that worked out. Either way, there's probably one day's difference or something. That's why I've got a 0.03% difference. But yeah, that's how the portfolios are performing. Now, the big one and the most fun one is my net worth. So let's take a look at that. My net worth now is $151,000 and $151,857.15. That breaks down into the value of all my portfolios, not counting Vanguard, being $27,196.94. Cash sitting in the bank of $16,126, and then the 401k balance of $108,611. So the value with the 401k is $135,808. I've got $78.46 on one credit card, which is just a charge that I put on there to pay my my cell phone bill. So that will be paid off this coming month, and it's just a normal everyday monthly charge. It's not real debt because I'm never going to pay interest on that. I'll be paying it off every month. Net worth is total $151,857.15. If you look at the details, here's the values of all my different portfolios. They add up to $27,196. There's the cash in the bank. There's the 401k minus the $337 still due on the loan, and the total debt from the credit card. If we look at the graphs, you see the net worth jumped dramatically thanks to selling that silver, and debt dropped to zero basically. Tracking wise, it means since April 3rd, my net worth jumped by $72,220. So that's pretty amazing. Like I said, I did have the nice advantage of selling that silver, which helps make up for some of the time that I was not saving. So that is our update, guys. I've got a lot of work to do this month, a lot of busy stuff. I've got to rent a U-Haul, move stuff to New Mexico where I'm going to be storing it. I've got to sell a bunch of stuff. I've got to get the yard clean, got to get the house clean, got to get holes in the wall fixed and holes in the door fixed and all that good stuff. Get stuff moved out of here into the new place and the works. So yeah, this next month should be very interesting when my expenses drop dramatically. Of course, during this month, I will be spending some money to move out, and there's going to be expenses involved with that. Also, I have car maintenance that's way overdue, and I need to pay for it too. So yeah, that's the update, guys, and this is my current net worth. So big jump, and I'm happy. I got a nice head start. And that's the deal. I hope you're all doing good. I hope your portfolios are performing well. They should be, with the market being at all-time highs. And if you have any questions or need anything answered, let me know. Have a good one. All right, guys. Thanks for watching. I appreciate it. Be sure to hit that subscribe button down below. And if you liked the video, hit that like button for me. If you want to hear any specific type of information, anything that you're interested in, you have any questions, just drop me a comment down below. Let me know what you think. Let me know your opinions on this video or any other video I've made. And if you know anyone else that might be interested in this video, please be sure to share it on your social media and share the knowledge. Thanks, guys.